Good morning, everyone. I would like to welcome all of you to our joint Efma Microsoft webinar focused on PSD2 topic driving digital transformation in banking. My name is Barbara. I lead Efma webinars and I will be your today's moderator. Before we start, let me kindly introduce our speakers and the agenda for today. Richard, if you move the slide to introduce the speakers. In the beginning, you will hear the, let's say, topic brief background from my colleague Lubomir Olak, Director of International Membership Development at Efma. So, Lubo, welcome to the session.
Very good morning to all of you.
Then it's a pleasure to welcome Richard Pierce, Banking Industry Director for EMEA from Microsoft. He was one of the project leaders and our key topic expert for our jointly published Efma Microsoft report. And today he will be presenting the key insights for all of you. So Richard, welcome to the session as well.
Good morning. Thanks very much for inviting me.
And last but not least, we also prepared an interesting practical discussion for you with Jose Vicente from Millennium BCP. Jose was actually one of the report co-creators, or let's say advisors, because he was joining our brainstorming sessions. And today he's ready to give you some kind of, let's say, practical advice or experience from Millennium BCP on how they're trying to become PSD2 compliant. So Jose, also pleasure to welcome you to today's session.
Thank you, Barbara. Good morning to everyone.
So some very quick instructions for all of you who are not that familiar with GoToWebinar platform. As you may see, your microphones are muted in order to avoid any communication noise. So if you would like to directly ask question or comment anything on the presentation, you need to use a hand button which you can see on the toolbar. So then I will unmute your mic and you will be able to speak. Otherwise, there is a Q&A session prepared for you at the end of the webinar. So in case you prefer to write down the questions, you can send it to me to Efma Webinars, or you can use the chat section, which you can see on the bottom part of the toolbar. Moreover, the session is being recorded, so all of you and then also the registrants who are not able to join today will receive a follow-up email with the video recording and also with the presentation slides from all the speakers. Now that's it. If you have any additional comments or questions, please feel free to get back to me anytime. And Lubo, the floor is yours.
So again, very warm welcome to all of you joining this webinar together with Efma and Microsoft. I'm very glad that we're having you online, and I hope you will enjoy the whole session, which this time is about PSD2. You know that this is one of the largest regulatory challenges that banks have faced in recent years, and compliance with the new legislation means that the financial institutions really need to make some significant changes to their processes. And the new directive also presents a range of course, I think for all of us, exciting opportunities, and also kind of sufficiently forward-thinking and agile to take advantage of them. For that reason, we joined forces together with Microsoft, and we conducted a joint study of the current situation in this industry. And the aim of the study was to really identify the key issues facing banks, to understand the opportunities that PSD2 present, and also to explore how prepared banks are for PSD2 compliance. For more, of course, will be presented by Richard. I just want to say that it was actually 3 online discussions we had in a format of think tank, where senior bankers were involved, and actually the whole study was shaped by their inputs and discussions. I think without further ado, I would like to hand over to the key presenter of today, which is Richard Pierce, and we will see the whole key findings of the study on the presentation you can see on the screen. Richard, is over to you.
Thanks very much indeed, Lubo, and really looking forward to sharing the study with you today. And actually what we want to do is to share the study and some of the key findings, but really focus on some updates that have happened in the industry and some scenarios before we move over to Jose, who's going to talk about what's happening at Millennium BCP in this context. So there's a little bit of the research, a little bit of the theory, and then the practice with some additional examples as well for you. And then we're going to have the QA session so that we can really get into the detail of where we're up to now, a few months on from the study. So talking about the study, one of the questions that came across was really around this particular area. What are the implications of PSD2? And I think, you know, just to warm us up this morning, it's wet and rainy in London, although I hear it's sunny in Portugal. Let's warm ourselves up. I think that we'll realize that the impacts of PSD2 are going to be very much around customer journeys, and that was what our survey said very much significantly, 67% of the feedback around that area. A lot of people talking about the distribution model, and that will have an impact on banks, and then also their product range, a smaller number, and actually I think as the months have gone on, we hear more and more talk about products, so that may be growing from the study which was done about 6 months ago. But at that point in time, what we found was that 67% of the survey saying that the journeys are the biggest area, as I've said, and 73% of those, though, planning to become an AISP or a PISP. So that's why I think when we talk about it affecting customer journeys and distribution models, you can see that people are picking up on actually being participants rather than just being, you know, if you like, slaves to the regulation here. There's a very active intention to get involved, and certainly we'll see more of that. But at the time, 6 months ago, 49% said they weren't technically ready to incorporate the new directive. But of that 49% that were not technically ready, 68% of them said they had a really clear plan to do that. Now, as we wind forward to now, and certainly if we look at open banking, which we know is an extension in the UK of the PSD2 regulation, most of the big banks, when PSD2 went live, were actually given notice by the CMA to get more to deliver more effectively against the regulation, but most of them, if you look at the detail, were going to be available and ready by February. So most were given a sort of slippage by about a month in the UK on the open banking rules, which were slightly further extended on PSD2. So our survey sort of said, well, we're not quite there, but we've got plans to be there. As we now roll forward, I think we see, you know, quite a few people are in place. So so the survey was talking at that level. Then it said, well, what are we concerned about with API management? Then some, as you can see here, were worried about poaching, about AISPs and PISPs stealing their customers. Quite a few were worried about monetization models. You know, we can't make money from PSD2 APIs per se, but what can we do in other areas of opening out our business? Others were concerned, 41%, around scaling concerns. You know, do we build too much capacity or too little capacity? We just don't know what the demand is going to be. And others were very worried about exposing their internal systems. So quite a few concerns around this. And probably the biggest concern was around security, and 24% of those believing that exposing those internal APIs would actually create a security threat. But if we go to the next area, which was around monetization, people were really quite, in our discussion panels, people were really concerned at the time about the monetization options. And so we spoke, and it goes out in the white paper that you can have a look at, that there are essentially 3 models and 2 sort of charging schemes models that you can approach. One of them being around, the most sort of typical that people are exploring is around partnering. And I'll unpack this one in a bit more detail in a minute to sort of give you an instance of how it may happen. But the partnering across a value chain, where actually you may not be charging, but you may not be charging explicitly for the use of an API, but you may be charging, you may be building a value chain so that you can actually increase each other's product stickiness or growth of new products, or creation of new customer groups. So that may be a method, and it seems to be the one that we're seeing emerging the most, and I'll come back to that in a minute. The next one is the public API, and this is really where most companies like obviously Microsoft, Facebook, Skype, Twilio, PayPal, these big public organizations, IT companies that produce APIs, these are made available, and then there is a wide variety of models, a bit like the examples that you can see to the right of the screen. And then there are private APIs, and the private APIs are often built just so that you've got a more flexible and agile development environment that you can work with internally, so that you can work across your business and your different sort of historical silos. And these are typically not charged internally. It's more about facilitating the business. But of course, there is potential for a chargeback model. But when you're building these private APIs, obviously the view typically is that you want to think about building them in a robust way so that they can be made external at a later stage, and then perhaps move through this public and partner stage. As we've seen, and you've probably read ahead of me, the freemium model is clearly what a lot of people do in the public arena. And what you're doing there is you're encouraging developers to use your APIs, and that encouragement is important because developers using the APIs are a really key part of the new services, the new models, the new value chains. And then as we move through freemium, you move into a tiered or volumetric model, which is really about the more you use, the less you pay. And I guess you'll all be pretty familiar with that sort of a model. But at the time of discussion of the survey, people weren't that clear. So then we spoke about how will you transform, and there's really these sort of four pillars that we looked at. There's the basic compliance, and I think what most of our survey group were responding was that this group is going to be just figuring out how to be compliant in time technically. And of course that gets you to a certain point, but it does leave you vulnerable to the concerns about poaching and people getting in front of you in the distribution model. The next level was, well, okay, we want to be compliant, but actually we now want to think about monetization. What services have we got? What can we put out there? Maybe sort of our risk capability and systems. Can we expose that as an API, and can we start to monetize that via an API in that charged model? The next is, as I am engaging with more and more people, more and more actors on the stage, can I actually start to monetize that, but also gain insight from it? So I learn much more rapidly about my customers and their behaviors, and from that I can develop new models of new products. And of course, the one that we talk about the most, and you're probably most familiar with, is the value aggregator. How can I become some sort of value aggregator? And we think about an account information service provision as a value aggregator, but it may be acting as a marketplace, and I'll come back to that as in a moment. So when we look at this, and I'll just sort of speed up a little bit, you think about this new banking ecosystem, and what was clear to us and in discussions is that we really need to sort of explain not just this base exposure of APIs, but also what does this mean going forward and potentially. So we put a little scenario together here, which you can see in front of you. And in this scenario, really what we're talking about is a small medium business customer. This is somebody that we're trying to serve in the sector. These are the actors, if you like, in this little story. We've got the commercial bank, we've got an insurer, we've got a fintech, and we've got a logistics customer. And in this post-PSD2 world, the commercial bank product manager has been challenged by her CIO to bring a product to market. And this has got to be obviously a flexible business lending product that adapts in real time to end customer business needs. And of course, we all know that's really a real situation, because certainly the large players like Alibaba with Ant Financial and Tencent with WeChat and WePay and others in the market are actually using their rich interactions with consumers and suppliers to actually lend flexibly against the demands of small and medium customers. So we know this is a real situation. And these products need to be sort of multifaceted. They, probably need to include the insurance premium to secure collateral and minimise the risk of the loan to the bank, but also things like quick risk scoring to ensure regulatory compliance. We've got to still take full consideration of the complete life cycle of credit contract settlement and standard qualifications, etc. So with this, the customer is looking for this flexible product, something that's going to help them with their cash flow, something that's going to help them as they build this new product, start to understand, the real-time demand and on the fly relationships that they have with their service providers, so that they can deliver the product, manage the cash flow, get the money when they need it, but do it on a much more rapid iteration than they've perhaps historically done to date. So we looked at that to say flexible products, frictionless. They really want a frictionless experience, as little paperwork as possible, and really to expedite the cash flows. Now, for them, they obviously have their data, and their data is something that is valuable. So they can start to provide the data, but this would be using, in PSD2 terms, as it advances the regulatory technical standard and secure customer authentication. All of these align to the consent model, which means that the customer should feel confident when this is well implemented about putting their data forward, not in a blanket way, but on a permissioned basis with consent explicitly for the transaction. So the customer knows what they want, and they also know what they're trading, which is to a certain extent their data. Now, the commercial bank are obviously looking to attract and retain top business customers in the face of the disruption and the new entrants that I spoke about before. But what they need is obviously agility to bring new personalized products to markets and leverage the new open banking systems. So the bank, with this need to accelerate time to market and agility, is really also looking to increase relevance to this small and medium business customer base, which historically has been quite underserved. So what do they bring? They bring obviously expert orchestration, experience around lending, risk management, still very much trusted organizations. Ultimately people still trust their bank. They know that the risk and the regulatory regimes support that. And of course, they still have huge historical data that can inform risk models. So the insurer, which, as we know, typically, even if you're the insurer within the bank, is sort of a very much a siloed sort of business, what they want to do is extend the relationships, and insurers have really been looking at disruptive business models and experimenting with things like dynamic pricing. And this comes from things like IoT and machine learning, which is bringing vast quantities of data back, and then they can apply that to decrease prices or do spot pricing based on certain behaviors or input that comes in. And just one example for me is Revolut, which is a service I use. I don't know if you're aware of it, but they now have just started to offer a product. My son also uses it. He was in Canada skiing, and it just says, "Would you like travel insurance? We see that you're traveling abroad," and he could buy insurance on the spot, prompted to him on a daily basis, and with a few clicks, he could look for snow insurance, and he would get a personalized price just for him. So we obviously, again, all of us know this sort of dynamic is happening, but it's how does it integrate into this particular value chain? Now, of course, what do they bring? Actuarial risk modeling expertise, brand name, credibility, all sorts of capabilities. So they want to open these new channels, they want to create the new revenue streams, and they want to explore real-time risk scoring. The fintech, now lots of banks and insurers have been working with fintechs through accelerators and testing and piloting, but it's been frustrating for the fintechs to get to market, to get customer acquisition, and obviously there are big regulatory moats that they have to get past. So they value working with the banks and the insurers, and working through that channel of regulatory protection for the small and medium business. So really what the fintech is looking for is data-rich partners that can help improve their algorithm accuracy, but they may have a bit of magic sauce that really brings this ability to do the real-time risk scoring to the party. So they want to scale and grow their business, they want to gain credibility, they want to improve their risk models. So finally, logistics. We have a logistics player here. Obviously, a key part of all of this is that the assets need to be secured and act as a collateral to the credit loan. So IoT in modern logistics companies, Internet of Things and sensors, it means that the logistics company can really keep a handle on the journey of any particular asset, which then can obviously generate data in real time and feed that back through the chain, so that we can just make sure that the risk is minimized and the asset is acting as a collateral. So they're helping enable the digital supply chain, and they're helping feedback and improving the models across the whole spectrum. So in this example, they're opening new channels, they're joining in strategic partnerships. So, sorry, just go back. So then in that example, what we've got is not necessarily just a sort of a marketplace, as you do on your iPhone, of individual applications that just sort of separately you load onto your device. You're talking here about more of an integrated experience where data flows across these different organizations, so that you get a seamless journey for that end customer. And as a future state, that presents difficulties for organizations in terms of data security, consent, and so forth. But PSD2 and open banking and the technology enables these sort of scenarios. One example is a proof point. Is ClearBank. ClearBank in the UK, first new clearing bank in 250 years. And they've built their service in London, in the Gherkin. It's using the cloud, using Azure on-premise and in the cloud. But what they're able to do is to sort of become a utility which is focused in this commoditized world of payments clearing at the lowest price point, highest value, and through an API, they will be a chunk in the payments clearing supply chain. So a fintech will be able to create a service, they'll be able to connect into ClearBank. ClearBank will be able to connect into a financial institution that wants to use their rapid clearing services. So these building blocks are building out, these chains are being connected, and there's a lot of detail on ClearBank that we can share with you and how they've used Azure in the cloud to actually build their solution. So you end up in this world of this new banking ecosystem, and on the left bottom corner we see the bank. On the right, we see the customer, if you will. And what I'm trying to convey here is that one of the models we'll see is this platform model that we're seeing in so many other industries, where basically buyers and sellers are connected via a marketplace. That marketplace, I think many of the banks are starting to produce themselves, and they're using that marketplace as a way of keeping control of distribution, keeping relationships with their customers, but also at the same time working with the agility of the fintechs and those other suppliers, which is represented by those symbols in the middle. And those buyers and sellers are able then to connect via a marketplace and build the sort of scenarios I've mentioned. So examples of this, Fido Bank is out there with their Finance Bay marketplace, which is where customers, they can shop for these sort of applications, and they can find their products. And what Fido are doing is they're making sure they're curating the partners that are going into that marketplace for quality, security, and so forth. So very much taking that sort of trusted third party model and making sure that works for their customers. So Fido are doing this. Also, I was on a call yesterday with Call Credit. Call Credit are a data company basically, but they're very much in the area of credit checking. And what they've done is that they've built themselves out a solution as an AISP, an account information service provider, and they are going to customers directly, consumers, so that they can see what their risk scoring is, and then with that, people wanting to check the status of whether they can buy that car or whatever it may be, they are then with consent going back to their customer banks and saying, we have this customer that's looking to buy something, and here is their credit score, and then they're a joint branded offerings going back to the customer to say, in partnership with X Bank, we are going to make available, this particular offer to you. And again, they've used Azure, they've used the public cloud because they want to be a data guys and concentrate on data. They don't want to actually get into worrying about the underlying infrastructure for the real-time provision of all of this. And then on top of that, with the data they're using, they're then starting to explore machine learning and artificial intelligence so that they can obviously improve their credit scoring. So just two examples there that we can talk about. And the reason people are using Azure, I think, is because they do know that we work very closely in the financial services industry, so that you can use pure cloud, you can use on-premise, you can bridge the two, and then you can actually build applications, drive them with data in real time to get this kind of analysis that we're talking about, but all within your constraints of your financial services regulatory role, where we've done a huge amount to make sure contracts, etc., that we provide you with allow you to stand up to your fiduciary responsibilities. So let me just stop there for a moment, and what we want to do now is we want to bring in our panel of Lubo and Jose. So guys, can you join me on the conversation now?
Yes, we are online. I hope Jose as well.
Yeah, I can hear you. Hear you. I hope that made sense. I sort of feel as though I'm talking in a vacuum for a few minutes, so I hope I haven't bored everyone to sleep. Let's bring this to life, Jose. So tell us a little bit, just a brief bit about yourself and also, of course, Millennium BCP.
Well, thank you, and again, good morning, everyone. Richard, you have mentioned one important thing in your presentation, it's about on the survey. And I'm looking at the survey again. 67% of the survey participants felt the biggest effect of the PSD2 is actually about customer journey and revenues. I've been involved with the PSD2 for the last 3 years and preparing the bank. And one of the things I have noticed is in Portugal and specifically in my bank is we have two big challenges around this topic. The first one is how to change the ecosystem and how to adapt or adjust the ecosystem, the bank to the new ecosystem, in fact. So we have these two challenges. One on the side, the whole ecosystem moving into the digital world, and the second one, how you do that with the bank. So we face in our ecosystem, current ecosystem, a big challenge because in Portugal, we had always moved into a competition kind of model where we had a kind of technical facilitator, especially in the transaction banking, which is our local CSM company called SIPS. And this company was able to be the basics of our offer in terms of transaction banking for all the banks in Portugal. But this was the basic layer. Everything else you build on the top of it was on behalf of each bank. And so that's why we call it competition model, okay? So it's kind of, we had the basics because the system is not a big system in terms of critical mass, but, and we took competitive advantage of building together something. So we have the same problem today, or challenging today, which what to do now? I mean, to do now, we decided to move into a direction where maybe we can share service when it comes to compliance, okay? We can share competencies, and we can share solutions when it comes to the basics, the compliance basics of the PSD2. A different story is when it comes to the competition, where you want to offer to your customers a different customer journey, and how you're going to build your new revenue models within the PSD2. So, in our opinion, the key challenges for the PSD2 is to focus on the innovative solutions for your own customers, okay? And this is the first one, okay? And we see that collaboration is fundamental for to bring these into the new ecosystem. The second one is the definition of target in terms of business. You need to define which companies are willing to take on board, and what companies and which companies are willing to work with you in order to do some type of experiment, try what you have in mind in order to bring these companies into this new ecosystem. So, and we have taken these two steps. On one hand, focus on innovative solutions, how to expose services, how to consume services from other partners or players, and at the same time, how to define which companies could be useful and could be ready to take on board to make such a proof of concept. And this is where we are staying at this moment. So we are actually working on proof of concepts in terms of bringing new solutions for small and medium-sized companies or even private customers. But the idea is always around this idea of how taking advantage of all the data, all the digital data you have available, how to take the best out of it. So I would say that there is nothing new, but the way you have to improve and the way you have to come to the market goes in a different route, because you need to collaborate in order to bring some of these new competencies in order to help or assist your small and medium-sized companies in order to come to the, and there are several examples, and I could speak about cash management, I could speak about transactional business on the cross-border basis, how to incorporate new features that can bring service to the clients on a better way. So there are plenty of opportunities in the market, but you do need to define a model of bringing these innovative solutions and test them before going to the market. So basically, it's what I would like to share with you in terms of what you do. What is the model we are following?
You speak about there, the journey, and I think it's really helpful, informative for everybody. So let me just see if I can play it back. You've decided that the kind of core infrastructure, if you like, is relatively commodity. So you're focusing on the value-added services. So just to summarize, would you say that in terms of the my four models I had there, basic PSD2 compliance, you've sort of taken that as a relative commodity. So you're focusing on, how can you monetize, how can you build the value for your customers, and that is where you're doing this rapid prototyping. Have you had to, if I've got that right, have you had to really think about new organizational structures? People talk about agile DevOps kind of mindset, a different culture, that the API becomes a product which has to be appealing, and a lot of that is different to the cycles of producing a new product every year or so, because it's so iterative. Has there been more to this than just getting ready for PSD2, would you say?
Yeah, exactly. So exactly, if you see the slide you have shown where how you transform, in fact, I mean, you either comply with the regulation on that basis, and that for us is a commodity, and it's not our focus. It's a focus in the sense that we can do that either partner, we can do that on a community basis, whatever. But the main challenging here is how to prepare the bank to make to break silos, in the sense that it's a more complete journey that you are trying to offer to your client. And to find a different model where you can address the challenges, in the sense that you need to define a clear target to which companies you are going to use, which ones are you going to try to test some of your ideas, and this is the most important thing, I would say, in terms of moving forward in this new value add ecosystem.
So there's a culture, there's an operating model as well as sort of technology. On the technology side, you know, obviously people were concerned in the survey about exposing APIs. Would they be able to? They were concerned about security and even the ability to scale. How have you addressed those problems?
Well, first of all, in terms of internally, it's important to have a dedicated team where you actually try to set up different areas of the bank and put in perspective where everyone that will be affected or impacted by the PSD have the same language, have the same culture around what's going on in terms of, and take advantage of the different changes that we are facing. So this is one of the cultural topic that you just mentioned. The second one is when you come up with certain idea, say on bringing new services and cash management or something for a small company, you have to make sure that you have the right people on board in terms of the different departments that may have a saying on this. So I would say that it's not only about technology, but is the way that people will make use of the technology. But the idea it's the people that will change the things, and not the technology. The technology is there because it will assist you to make some leapfrog and some changes that you could not do it without this new tools that you have available. But mainly the fact that you have the right people to choose the right model, the right offer to your own clients.
Mm-hmm.
You have to keep in mind that the client is the ultimate goal of your offering.
So thank you. We spoke about monetization and obviously customer journeys, a significant part of the survey, and then the question of monetization, which I spoke about. Do you look at this as, obviously PSD2, it's not a monetization opportunity per se, but do you look at the data? Do you look at new customer journeys? How do you take into consideration? Is it all about customer service, or is it a monetization opportunity for you, or do you treat it all the same?
Yeah, we look at both because it's about both tracks that we are talking about here. So, of course, if you are improving and if you are improving the life of your clients and your customers, they have the perception that you are doing that. So in that sense, I would say that it's about monetization as well in that sense. So the models that you come up, in the end, it's a different story, but the opportunities are there, definitely.
Yes, absolutely. You're working with Microsoft. I just wonder if there's a sort of sense of what that brings you. Has it been? I'm hoping it's been a good journey, which is why we're on this call together. But has it worked out for you?
Yeah, definitely. I mean, the job we have done with Microsoft since the very beginning, it's not only about the solution itself, but also the fact that we are able to share many ideas of how the ecosystem is moving and also how to take advantage of the solutions that we are implementing by being more or less flexible. The tool you have, you want always to take the more is possible from this solution. So in that case, I have the feeling always that it's not only about this platform, or it's about sharing ideas, it's about sharing opportunities and so on.
Yeah, I think that's true. I think the days are very much around partnership, aren't they? Which is what are we seeing in other industries? What are we learning in terms of patterns and practices? What assets can we all bring together? Because this connection of value chains is not just about you with your customers. It is about the whole supply chain, Microsoft and other technology providers doing more than just providing you software and platforms. So yeah, it's interesting you should put it that way. Is there anything, we're going to go to a Q&A in a minute. I'll just remind everybody that you can submit questions in the method that's been described on the chat window there, or you can put your hand up and obviously speak to us. We'd love to hear from you. But just before we do that, is there anything that Jose, that you would want to add that we haven't discussed that really kind of crystallizes for everybody what it is you're doing, how you've done it, and any recommendations you would have perhaps before we move to the Q&A?
Well, not very much more than what I just said. I see some challenges in terms of community, because in terms of community, we do have to move into a different ecosystem, and might take more time or less time according to the participants. So moving together, it's probably the most difficult thing in terms of challenging, but that's the way it is. We cannot afford to avoid that. The world is changing. The objectives of our customers are changing. The expectations, I would say, the expectation of our customers are changing, and this is either you do it or you don't do it. I mean, so it's more or less the message I would like to say.
Yeah. No, I think that's people. I see that across the world. Lubo, I don't know if you want to sort of jump in now. I think there's been a few questions coming in. You've been probably watching that while I've been chatting away here. Is there anything you want to pick up on, either about the discussion we've just had, or before we open that out to the wider audience?
Yes, I mean, we already got some questions. One of them, and probably we haven't discussed that much into details, was actually the participants of the survey and the steering committee. So let me very briefly to sum up who was a part of the steering committee. There you have the idea who was actually giving the inputs also to the study. So it was a varied audience. We had participants from Poland, from Alior Bank, Artur Smolarek, for example, also from Spain. We had a couple of participants either from Banco Sabadell, CaixaBank. I'm not going to name all the participants, just the name of the banks. We had also banks from Italy where participated, the digital banks like Vidiba, which is part of Monte dei Paschi. So the number of participants were really from different kind of countries. Also, the participants of surveys. So from the north to the west to all potential directions you can imagine. So just to answer to the question we received, to the overall discussion, I would like to add is definitely during my discussions with member banks and with the financial institutions, we really realized that most of them, they still in a mode of how to get compliant more than to take this new regulatory as an opportunity. And actually the survey, it confirms very much. So I just would, really say that the question is, which I receive many times, so, okay, it's very nice to build up the ecosystem, but what about if we are really a mid-sized, smaller bank, and we probably don't have these economies of scales like the big banks. We don't have that much investments. and we really cannot go that much for prototyping. Okay, try to build up something. If it fails, okay, let's see, because we cannot afford it. And probably my questions to both of you, or probably to the audience. So, what to do if of course, the clear ecosystem model, which is one of the key findings of this study. So what to do if I'm not that much big and I'm not able to make these blocks of these ecosystems? So what to do? To be just a provider and to lose interactions with my customer? I guess most of them, they want to end up in that way. So probably, if I may ask you, Richard, probably Jose later, if you have your perspective on this.
Yeah, sure. I mean, I think that we have another white paper which we did separately, which was 3 visions for banking, and in their 3 visions, one is that actually utility becomes a virtue, or commoditization becomes a virtue rather, and that's an example. In the ClearBank is an example of that, where commoditization has reached the point where the smaller banks don't want to do everything that needs to be done, whether that's KYC, AML, whether it's payments clearing, an example of ClearBank. So new entrants come in, they can offer, as I said, a lower price point, potentially a higher value, and certainly probably a greater speed of service, which is really key. We need to move from a batch to a real-time world to deliver the sort of example I was giving. So utility actually can become a strength for some people. Most people, certainly the universal banks, won't accept that and will want to very much retain control of their distribution model. And I think there they will do the marketplace scenario that I put here. So their back-end systems, which are very complex, they'll expose those via APIs. They'll use the cloud for systems of innovation and systems of differentiation. So keeping on-premise but exposing to a cloud. That cloud will then allow them to, at a low cost, because it's only on a consumption basis, you don't have to over provision with too much hardware, they'll be able to then actually experiment and then build up as the scale of demand actually comes through for the new products and services. And that's a model we're seeing a lot. And indeed, there was a bank in Southern Europe that fits the description you just gave. They came to us and our partner Accenture Avanade. They did an RFI and RFP. We responded to that. We gave them a sandbox to experiment with. As a result of that, they went to a hackathon. As a result of the hackathon, they wanted to take that into production, and they didn't actually start paying for the technology services until they actually went into production. Everything else was just a services contract in advance of that. So it was a low-cost way to experiment, iterate, and get to market. But the final model, so just to reiterate, utility and marketplace, the final model is a world where you have a very thin distribution layer, which might be a social media app, or it might be a kind of millennial neo banking app. But what they'll do is they'll connect a lot of services, micro banking services from around the total open banking ecosystem into that distribution mechanism, and the end user there will sort of become more in control of their own world. That's very much what you see neobanks like Monzo and sort of Starling experimenting with and Revolut that I mentioned before in the UK. But Jose, do you have a view?
Yeah, yes, I totally agree with you, because one of the ideas that it's important to keep in mind, in my own opinion, is that the marketplace does not come from out of thin air, because the marketplace is something that you want to build, and you want to take advantage of your own past experience as a previous ecosystem. So one of the topics that we are discussing, for instance, as a community here, is there anything in the past that we have done, which is a utility kind of utility services that you would like to expose today in a common way as utilities, such as small things like, I give you an example, the possibility of adding validating a text number against an IBAN or something like that. These are the services that sometimes governments for authentication purpose need. And this is the type of thing that today, with the different technology, you can even expose these in a different way, in a more rich way than you did before. Technically, it took time to do some developments before to expose this type of services, and today with the new technology is not the case. So what I'm trying to say here is that it's important to think about the marketplace. What type of marketplace do you want to build, and what is your own differentiate offer, and what is your common offer, in order to go into a specific place, to a specific target, which is to build as a bank, either if you are a small bank or a big bank or a medium bank, to build the new ecosystem where you still have something to say in the middle of this high competition.
Yeah, I think that's really key. I think we're doing a workshop on February 8th and 9th at our Brussels Executive Briefing Centre, and there we spend a day and a half. And what we do in that first day, obviously, we talk in this similar style that we're doing here. Then we discuss in round tables. But the key thing that you just said there, Jose, is on the second day in the morning, we get in a room together and we try to do some co-creation around the new experience, the new product, the new customer journey. And the key question is, what is your core value? What is it that you want to be known for, and you believe is a differentiator for you? And that allows us then to really start to unpack, okay, how do we get that to market? Is it via a marketplace? Is it just an API, or is it a complete customer journey end to end, and there's just a couple of pieces to plug in here? But of course, as ever, you're right, you've got to think about your core proposition and then what market that area that takes you to. So really, this whole PSD2 open banking thing, it very much becomes part of the product management tool set and skill set that they've already had. It just brings a new muscle to play that needs to be exercised, I would say.
Okay, Richard, there's one more question from the audience.
Okay.
We've got a question from Thomas, Unicredit Austria. He's asking about the risk you mentioned, which you defined as poaching or stealing clients. How fast do you think this would happen? I mean, it's an open question also to Lubo and to Jose as well.
Sure. Well, and I've got an opinion, but Jose is the banker. What's your view, Jose?
Yeah, it's a tough one. I think, again, it's more or less, I don't know if I will address completely the answer, but the challenge is, again, how you're going to build such an offer that will make a difference in the market towards your main competitors. In that sense, and we are facing these not only by banks, but I would say even by big techs that are already appearing in the market. So it's a brand new world that we are facing now, and from that sense, the best thing to do is to define exactly what is your goals in the market and where you want to be in a very concrete way. So I don't know how to answer that specifically, but it's something that we all feel, and that's something that we all have to address.
Yeah, I mean, I think from my point of view, I think it is a real threat, but perhaps not as in such a profound way as the words would express. Basically, if I think about myself, I'm using Monzo, I'm using Revolut, I'm using a number of these services, and initially I I thought, well, what do I want these for? It's just a prepaid MasterCard, you know, with a bit of budgeting on it. But, you know, therefore my 20-year-old son and so forth started using it. But what's happening is the bank is seeing me transfer some money across to the card, but actually, and then it's losing the rich interaction of payment that going on. So it doesn't necessarily lose me as a customer, because I still put my salary and so forth in to the bank, but they're then sort of at the you know, the highest cost and the lowest value relationship with me that they can have, whereas all the rich interaction is happening elsewhere. And whether that's, you know, we all know people like Starbucks with their loyalty cards, you know, there's a huge amount of money sitting on deposit with Starbucks, which is therefore not being utilized. So it starts to sort of, you know, unpack some of the value of the bank. So I think the bank, you know, if you take that call credit example, where they partner with somebody that's offering a great utility, you know, will I be able to afford that new car? Am I going to be credit worthy for it? And then having a relationship, which means that they can instantly serve back to the customer an answer which allows them to make that decision. Really, this is where banks have got to get to. And whether, you know, we think poaching is going to happen in the short term or the long term, whether it's just, you know, edge data or core data, it's going to happen, and banks need to be responding to this because it's happening in every other industry. So I think it is a risk, but it shouldn't be overstated in the short term.
I just fully agree with you, Richard. It's just a question, because we already we can see in the UK you have kind of really how to call it, free switching policy, when you can switch from one account to another. And now is the question, how often this really happens. So probably it will not happen in the near future. That's a quick. But you know, in the long term, once all the platforms are well designed and proceed, and as we discussed in the study, that the customer journey will be the key, which will be the change, that probably might happen. But now is the question, what will be the time frame, really? But it gets ready, yeah.
Yeah. Well, I think the time frame for this kind of disintermediation and poaching to happen, do you mean?
Yes.
Yeah. Well, I think, you know, if you look at the UK, faster switching, which is what you're referring to, you know, there's a bit of a joke, which is it takes 7 days. So who wants to spend 7 days, you know, for faster switching? It needs to be sort of almost instantaneous, and it needs to be transparent. So that is a blocker. The main reason that people haven't switched is that, you know, there is an inertia in terms of services. There is also a trust in the banks, particularly around, you know, deposit protection and so forth. And a lot of these new fintechs, you know, the people just don't know who they are, and they've been educated not to give up their data to these fintechs. So that's why I think in my scenario, you know, I gave an example of actually fintechs cooperating with banks, with insurers, with logistics companies, because I think that is probably the truth, is that you'll get this nice cooperative blend. And while some of the bigger banks are struggling with their legacy technology, they can wrap it with some really modern services in the cloud with partners, and that will hold off a lot of the switching. But that's got to be done. It shouldn't be an excuse to do nothing.
I fully agree. Unfortunately, we're actually at the end of the session. I just would like to add that, of course, the study is available to download on our website. Anybody who would like to have the copy and couldn't get it, just let us know. And also, if you have any further questions, please get back to us. All is recorded, so you can back to the session anyway. And I'll let Barbara probably to say some last words, if anything.
Yeah, I mean, like, you summarized it very well, Lubo. Just a kind reminder, you always receive a follow-up email with the presentations, with the video recording, so you can quickly revise or even share the presentation with your colleagues who may be also interested to hear the insights which were presented by Richard and Jose and Lubo. So thank you very much for your attention, and we sincerely look forward to seeing you also in the upcoming Efma webinars. Have a great day.
Thank you, everyone. Really appreciate it. Thanks, Jose, Lubo, Barbara.
Thank you very much.
Have a nice day, and hope to talk to you anytime at some point. Bye-bye.